All right, hey guys, what is going on? Welcome back to another video, and in this video, we're going to be going over Morningstar statistics and results. So if you guys don't know, Morningstar is an algorithm, right? So it's based on my collapsing emerging EMA system. I'm actually starting a software company called Algo Labs, and so I've been developing this specific algorithm as well as our swing algorithm, and our plan is to release our software company hopefully by in the beginning of March, right? But right now we currently have beta testers testing our algorithms right now, for testing our algorithms right now. So we're just basically in the optimization last phase, trying to see exactly, all right, so is the historical results with our optimization test, is it actually not overfitted to current results, and are we seeing the same results from the historical data to the forward data right now? And so that's what we're doing right now at the current moment, and so far it's been performing really well, especially last month in December. So let's just go ahead and go over the my FX book. So you can see here that the whole results was from September 2019, 2011, so all the way to December 30, 2021. Right, so we have over 3,423 trades, which is, I know it's insane, but in the win rate over here, it's 14%. Now you're gonna say, dude, why would I want to trade an algorithm that has 14% win rate? Well, the profit factor is not even too bad. It's 1.64. Let's just see, the average win is around from this $43,000, and the average loss is around $5,000. So the average win to loss ratio is actually really good, and you can see here it's gained over in the last 10 years, close to 10 years, over 8,000%, which is insane. And you can see here the daily, monthly drawdown 32%, which is honestly not too bad for the level of gains that it's been currently at. So you can see here that we started with the balance of $100,000. And then at the end of the cycle, around $8.3 million at the end, which is around 8,000%, which is pretty good. So you can see here, the equity curve is pretty nice. Of course, there's always going to be drawdowns on any kind of trading system, trading algorithm. Here's a summary. So it only trades one instrument at this current moment, which is the Nasdaq 100. So I created the collapsing emerging EMA system because I wanted to exploit an edge on indices, right? And so exploiting the edge involved, basically looking at our indicators that we use here in Scalping University and looking for a specific scenario, a specific point, a critical point in price action where we could see a collapse. And so that's exactly, why I created this system. And then with this system, with this algorithm, I coded that into it, and now we have around around 489 wins so far, and lost 2,000 lost trades, which is, again, it's a lot, but it's still very profitable because the average win is much more bigger than the average loser. You can see here the risk or ruin. It's this was on the aggressive setting, so this is 1%. It wasn't too bad. We see here that the risk of ruin is there's a 3.27% chance of losing 10% of the account, which will require 190 consecutive losing trades, and 20%, 0.07% chance, 30%, less than 1% chance, 0.01% chance. So it's still pretty good in my opinion. This is the duration period. We usually have some longer term trades as well. So this is a day trading expert advisor. It's not really a swing trading expert advisor. Usually for the most amount of trades, it's closed out within 1 day, as you can see here. And then later on, there may be a couple of trades where it continues on for a couple of days, but usually won't last more than 7 days or a week, which I most likely for me, this is what I call a day trading expert advisor, because most of the trades are closed within 1 day. All right, so trades, longs one, shorts one, best trade, worst trade, profit factor. So a little bit about this particular algorithm. So there's no martingale strategy or grid strategy involved into it. It has a strict risk parameter. So it's not like it's risking like 10% per trade. It's risking 1% of the account size on this particular results right over here, and it has a a stop loss and a take profit. So some martingale kind of scalping strategies have no stop loss, and you're actually risking way more for just a small profit. And so that obviously, sometimes it'll make you good profits, but in the long term, you will lose money because the probabilities of it just going the other way and keep going the other way is, eventually it's going to happen. So, with those specific algorithms, yeah, you're going to blow your account. But with Morningstar, we do not have any martingale or grid strategy. It's a very set stop loss and take profit, right? And right now at this current moment, we don't have a trailing stop loss. We are testing it and seeing what we can do in the future. You can see here the expectancy, which is not too bad, around 460 pips or $2,000, which is, in my opinion, pretty decent. Standard deviation around $335,000 right there. Average trade length is around 16 hours. So, around 1 day, it usually closes out the trade. Looking at here lots, it uses a lot of lots because it's over the last 10 years, it's traded a lot. Going over here through the trade data, you can see here, the trades that it did before the end of the cycle. It's around, break even. Nice winner right over here, nice winner. So you can see here the losers, how big the winners are compared to the losers. And that's why this algorithm, this system, is actually that very, very profitable in the long term, because even sometimes in a short term, maybe it'll lose a couple of trades, maybe on a weekly basis, but over the long term, it has that edge where it's able to generate huge profits. And so I've never literally met or never seen an algorithm that basically has traded for like a large period of time, and it's entering on the 1 minute time frame, as you can see here, time frame 1 minute. And I've never seen an expert advisor or an algorithm that has this much of an insane results, where you're seeing, around more 3-digit, 4-digit returns over the years, especially entering on the 1 minute. So I think that's pretty cool. The model type that I used for this test was every tick, which means that every 1 minute tick, I'm, every tick data on that specific candlestick. So it's not using like 1 minute open, high, low, close. It's using every tick. So it's more precise data, more precise testing. All right, so looking down below, we can see here the monthly analytics. So 2011. So this particular algorithm, I would say system as well, underperformed in the beginning of the testing, which could mean lots of things. It could mean that the market was underperforming for that specific system, and later on it started to the system started to perform better. So 2011 around just break even basically. 2012 around a 17% loss right over here, which that's not right. It's Nasdaq 100. And then later on you saw break even. April 2012 to 2% win, 6% loss, 1% win, 9% win, 10, 5, 3, 13, 5%. All right, so 2012, it was not, it was not the best year, obviously. Going to 2013, you can see here, red, green, red. So 2012 and 2013 were actually red months, red years. So those are the only 2 years out of the 10 years where the actual system underperformed compared to the other years. So it's only 2 red years out of 8, which is, pretty good in my opinion. So, it does happen, right? Every trading system will underperform. Every trading system will lose money. It's just part of trading, right? And just making sure that that the actual system has an actual long-term edge, that that it will be profitable in the long term, is eventually what counts. So this is over a 3, 4, 6, 7, 8, 9, 10, 11. It's over 11-year period. So over around 9 over 9 out of 11 years, it was profitable, which is still pretty good. 2014. 8% loss, 2% loss on February, March, 10% win, April, 4% win, and then May, 8% win here. June, 13, 3, 2%. So you can see here in the summer months, it underperformed, which is completely normal whenever it comes to indices. The stock market usually slows down in the around the summer months, which is completely normal. And so, it's kind of a no-brainer that systems underperform during those particular months, especially whenever the stock market and all the hedge fund and big banks are actually on vacation. So October 14%, November 18%, and ended the December on a 4% loss. But overall profitable in 2014, 2015, You can see here, negative 2, negative 10, 1%, 9%, 2%, 6%, 16%, 5%, negative 5%, negative 4%, 10%, and 5%. So, I mean, still profitable 2015, 2016. February, we had a nice 27% month right over here. And over 2016, we only had around 2 actual red months. We had kind of like break-even months on August and October, but on 2016 we only had basically two red months. 2017, you can see here around in total 19% on January and February, and then a 15% loss, but still green over the month. Negative 3%, 2%, 3%. So you can see here the summer months again here how it's kind of underperformed, which that's kind of the, for my particular systems that I trade, I do underperform under those months because on indices, like I said again, are very slow and very choppy. So it makes sense that, we are underperforming during those particular months. And then November, December, we have 11% win and then negative 10%. So profitable. 2018, you can see your better results. We only had about around 3 red months here. But still, very decent here. 2019, a whopping 23% on January, February, March, April, very small red months. June, around 18% win. July, 16% win. August, 10% win. September, 26% win, 24% win. So you can see here that, later on throughout the last couple of years, it started to perform even better. So you can see here how 2011, 2012, it was okay, but starting to perform even better and even better, even better. So that just means that the actual system is starting to perform better based on how the market changes, how the stock market changes. So still profitable throughout this whole cycle. 2020, you can see here much more better results for the COVID-19 variant. We had a lot of volatility, so nice 20% winners here. Only about basically literally 2 red months, but just negative 2%. So that's pretty good. 2021, you can see here how 2021 was actually a really good year here. Around 30% winner, 5%, 8%, 7%, 5%, 17%. So we basically only had 1 red month in 2021, which is pretty good. But what I want to basically explain is, this particular system does lose trades, and it loses trades around 86% of the time. But the average winner is much more bigger, and it's had really good results over the last. I would say the last 4 years, 5 years, it's done really well. And it's still, I would say it's still. It was still. Let me just look at the year here. This is the exact same report. You can see here that 2019 we only had around 4 red months. 2020, 2021, really awesome year. 2018, right over here as well. Let me just go here to the, so you guys can have a better picture here. So basically only, actually 3 red months here. 3 red years here. 2011 doesn't really count because they'd only traded one particular month. So I always say 10 years in total. But you can see here that it's been green ever since 2014. We had like an 8% winner, a 4% winner, 46%, 157%, 81%, 460%, 150. I think that's over more than $1 million right over here in profit. So it's still pretty good, as you can see here. So it's still was green throughout the last couple of years. So I think that's still pretty good. Very nice addition to your portfolio, to your algorithm portfolio. It suits it really well because the whole point of having algorithms is to diversify your portfolio so it can manage your money. You shouldn't really focus on just one algorithm, right? So you could have, I think Blue Edge Financial has this Titan algorithm that uses kind of a neural network on deciding which strategies over 100 is the best. And so the downside of having that is that basically whenever you're using those algorithms is that sometimes complex algorithms are not better than simple algorithms. This is a very, I would say, it's not a very complex algorithm that uses neural networks that adapt to the market 24/7, right, or every single week or every single month, but it still performs really good. and we're still optimizing, we're still changing a lot of things to make it even better, to make the drawdown even less. But I think that's still pretty good for just a simple algorithm. And what you'll see basically is that these funds, these people come out with these really complex algorithms, and usually the simple algorithms that are actually have a systematic process of testing optimizations and are not just, you basically just made it up, or tend to actually perform better than the actual complex algorithms. And that's just basically people adding too much parameters, maybe being a little bit overfitted, and adding a bunch of more complex decisions for the algorithm to make that really isn't necessary at all. But like I was saying, so simple is actually sometimes better than complex algorithms, because on the simple algorithms you can exploit an edge very well and very nicely on a specific sector or instrument, and it'll actually perform way better than these complex algorithms, right? And even the drawdown will be better for sure. So what I've learned in my time of creating trading systems and algorithms, complex algorithms is simply not always the best answer, right? Simple can actually be better. And having a portfolio of very simple systems and algorithms in your portfolio with let's just say you have around maybe 10 to 20 algorithms that you're switching off and on that are actually really good, that actually exploit an actual edge in the market, will perform way much better than having one complex algorithm that trades 100 strategies. That's what I've seen. And so what I like about this particular system, right, is that it actually trades long and short. And so a lot of people are, I would say, a little bit scared on trading a particular asset that's like the stock market, because if you just have a stock market or an algorithm that trades the stock market and that's just longs only and only buys, whenever you see those big huge downturns, that's whenever you could be actually in trouble. So I think that it's very important to have an algorithm that can trade both sides. So whenever the markets continue to fall down because of a massive news event, you can take opportunities of that and you won't lose money. So you can see here long and short. Long, obviously, it made more money. That's not a no-brainer for the stock market. Shorts, it still made decent gains. As you can see here, of course, the winning percentage is much more down, and it is losing way more, but it's still profitable, which is pretty good, which it came in handy in 2019, 2020, 2021, whenever we saw those huge moves down. But this is the equity curve for the short side. Still a very nice equity curve, as you can see here. Very nice. Of course, you're seeing multiple, I would say, drawdown periods, but still very profitable. And I think that's it's very nice to have that, right? You really want to have an algorithm that's has the ability to trade both sides, especially whenever you're trading indices. It's such a volatile asset. And you can see here, of course, the short side had way more red years, which is a no-brainer because obviously the stock market has freaking been insane the last 10 years, just going up, going up, going up. MorningStar with 0.5% risk. So you can see here over the last 10 years, 975% gains. Monthly about 1.92. Drawdown or max drawdown, which are around 16%, which is honestly not that bad. We started with $100,000, and over the end of the cycle, about $1 million at the end of the cycle. So looking at the trades, still the same win rate. Average win 6%, average loss around 685. So a very nice risk reward ratio right over here. You can see here that profit factor on 148, standard deviation right over here. Summary, you can see here that obviously it's had a shorter win rate, and the long side obviously underperformed way better than the short side here. Daily risk of ruin. So this is what I want to basically show. So there is a 0.01% chance of losing 10% of this account. This will require over 157 consecutive losing trades, which I think is pretty good. It has a decent, not a very bad, I would say, drawdown level. Worst trade, drawdowns are only around 16% right over here, which is honestly not too bad. And so it's risking 0.5% per trade. And the risk of ruin chance of losing 10% is very low. and it will require you 157 consecutive losing trades, which is, very, very unlikely. So I think that's awesome, seeing that. And you can see here, the max daily drawdown stayed at a certain percentage, so it's not like too bad. So it stayed within a range, as you can see here. 2013, not too bad. You're seeing, a little bit bigger, I would say, losses on almost particular months, but still very consecutive over the last, over 2014. 2015, you can see here, it's definitely underperformed here in 2015, but it's not even bad drawdown right over here. It's only like 5%, break even, 4% win, 1% win, 3% loss. So this is pretty good. We're not seeing very massive drawdown. So I think it's pretty good in my opinion, because if you're wanting to be very conservative on Morningstar, then obviously you can do that, and you can see, have pretty decent returns on this. I think the biggest red month was, I think 8%. Yeah, around 8%, I believe, was the biggest red month, which is honestly not even that bad. So pretty decent. 2018, you can see here, very green. 2019 performed really well. It was actually averaging close to 10% per month. 2020, you can see here, very decent, averaging around close to 10%. 2021, very, very nice. You're not seeing these crazy nice, insane gains like you are seeing on the aggressive settings. This will actually be way better for funded accounts, because the drawdowns are not going to be very insane. If you even want to be extra careful, you can always reduce your risk to 0.5% to 0.25%, which is pretty good. But the drawdown levels here, it's honestly not that bad. You can see here that the max drawdown on a particular month was 8%, which honestly is not that bad at all. And then the max overall drawdown on this particular settings was 16% right over here. So pretty decent, not the best, but I mean, for 900% returns, an average of around close to 80, 90, 100% returns per year. I think that's pretty good. Close to $1 million in profit at the end of the cycle. So that's still pretty good in my opinion. Still closing within 1 day, just reducing risk. So I think that's pretty much it for this video. These are all the trades that we have here. So if you guys want to look at the reports, these are all the reports, all the trades that it took. So lots of trades here. Over 3,000 trades here. So you can see the dashboard as well. But I just basically wanted to show you guys Morningstar, the statistics, the actual results, and explain a little bit to you guys what Morningstar is. And so I'm very excited to release my software company, Algo Labs. I'm very passionate about this, because not only am I trying to change the industry and actually documenting these algorithms and actually giving out these reports, because there's some software companies that don't even give you reports, don't even give you the testing, don't even give you the logic behind that system. And if you're trying to have that algorithm trade your account, it's a very bad idea, because you're not having any, you don't know if that actual algorithm is actually profitable, it's actually robust, does it actually exploit an edge in the market. A lot of algo people, a lot of algo traders that try to code, do not basically try to exploit an actual edge that's going on in the market. They're just trying to reinvent the wheel, try to look at these basic indicators and try to look at all these parameters and see if it actually starts working. But with my algorithms, I try to exploit a specific edge in a market, and that's what I've been doing. I have a documentation process where we've done several optimization tests, over 100 optimization tests. We've had a documentation on the testing, the forward testing, the walk forward optimization test, as you can see here on this report right over here. And we're forward testing right now, so we're documenting everything. So everything, whenever it comes to algo trading, has to have a documented process. It has to have, I would say, data, facts, right? It has to have facts that the system is working, the system is robust, the system has an edge, and is actually profitable. In the long term, it won't blow your account. And a lot of people won't do that. they just maybe test the algorithm for 1 or 2 years and say, oh, it's profitable, right? Let me just go ahead and sell it to these people, and hopefully they don't blow their accounts. It's honestly such a stupid way of putting things, because you don't know how the algorithm will react to all these different market cycles throughout the years. And you really need to know exactly, does this actual algorithm have an edge? And this one, Morningstar, obviously has an edge right over here, which I'm happy about. I'm excited to release my algorithms in my company and to create future algorithms that I have in mind, based on my trading systems and stuff. So yeah, that's pretty much it. Let me know if you guys have any questions at all about Morningstar. If you guys do want to get into the beta testing group, make sure to direct message me on on Instagram, and then I'll be happy to help you out with that, and also link in the description as well. But other than that, let me know if you guys have any questions, and follow me on Instagram at jace.brand, and I'll see you guys in the next video. Appreciate it.